I think the recent pullback, of course, underscore a short-term temporary volatility because investors have to balance the impact of higher interest rates with increasing optimism that pent-up demand will boost earnings, right? But I think it is very important to focus on the big picture, i.e. global central banks remain accommodative. We have heard comments from the Fed and some other Asian central banks. And then overall, the fiscal stimulus packages is still very big globally. And all these should provide a solid backdrop for economic growth. So, and the historical analysis, as you rightly mentioned, also shows us that equities can still do well in a slowly rising inflation environment. And more importantly, if we look at the earnings trend of Asian corporates, the revisions are still positive across a broader range of sectors. So I think as long as we are having a short-term pullback, we think this is just a consolidation instead of the beginning of a new down cycle. So that's why we remain constructive in Asian equities.
Right. And particularly which sectors, Janet?
For sector-wise, as I mentioned, I think there is simply a broader range of opportunities across many different sectors, say, for example, for tech and then financials. But I think overall, we do see slightly better expected return from financials in the region. Of course, within financials, there are two groups of banks, right? One group is the banks in some of the higher growth markets like India and Indonesia. They continue to benefit from what we call the financial deepening trend, i.e. people have more access to banking or related products. And the other group of banking stocks, of course, is in the more developed Asian markets, where the bank's profitability is more linked to interest rate environment, say for banks in Hong Kong, Singapore, or Australia. So I think for both of these two groups, I think the operating environment are both very positive for them.